Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a very choppy session on Friday, and now with ahead of this week we've got a large amount of data to get through. It's likely to see an extension into that choppiness from Friday with the RBA on Tuesday, and then also we've got Australia's GDP and retail sales. Along with that, we've got Guy Bell from the RBA, and also in middle of the week we've got US Fed Jerome Powell, and also the end of the week, the main event, which is the non-farm payrolls. After the weaker number from the previous release for the non-farm, we're expecting a stronger number to come in. So this could see a little bit more indication of a stronger US dollar. As you can see, we've dropped from the top side of the range in the Australian dollar and now stabbed at the bottom side where the bull camp is, which is around 76.60.90. It is assessed that furthermore, that the broader picture, if you look at the weeklies, is still somewhat negative, but a little bit of divergence there. But looking at the broader picture, I don't feel we will break out of this range just yet. So likely to continue to play in this 76.60.90 to 78 figure 15 range. The US dollar, which measures the greenback strength against a basket of 6 major currencies, rebounded back to the 90 handle, and from that saw a stab at this trend line, as you can see here, posting a hanging man and a doji before that, and could see another one. If we see 3 dojis in a row, that is a tri-star and somewhat negative, and therefore could eventually see this trend support give way and look back towards 119.90 to 120, which I'm in favour of, given the fact that the indicators are somewhat weak. Looking at the dollar yen case, it took the challenge back to 109.90 to 110.10 and ended up posting a greystone doji, and therefore somewhat negative. But we need a little bit more confirmation, and that is a break of this candle. If we see a close underneath 109.40, then we should see a further slide back to 108.45. So now awaits the confirmation to support this negative candle, but they also do need the technicals to break down a little bit. So still, let's not rule out the top side challenge, but let's see if we can get the confirmation to support the bear case. Looking at sterling, well, the market's still contained by the resistance of 142.20.45. It is quite impressive that we've held it for some time. And also with the hanging man from Friday, could see a little bit more weaker play. Now the UK is on holiday today, on Monday, and also so is the US in Memorial Day, so therefore could see a little bit of a weaker play. But the longer we maintain this cap, the risk is for a fallback to 140. The break above 155.25.50 for sterling yen has left me neutral in the short term. I've not seen any further follow through. And it was just the pound leg that got triggered after more of a hawkish case from an MPC member out of the Bank of England that did make a comment late last week that drove the pound higher and drove the cross higher as well. So I'll sit out for the moment and just see how long we can sustain at these highs. Well, a little bit of a mixed pattern here when it comes to gold. We haven't cleared 1,918, and also on the flip side is the fact we've got a couple of negative candles here. We do need to see a little bit more in the terms of support to break down further. Otherwise, we could still continue to chip away at this top side. Now, above 18 leaves me neutral, and I'm a little bit cautious in coming out with any real strong calls at these levels until we get a little bit more in terms of confirmation from the indicators. So like you can see, may see that is a little bit more of a puzzle pattern coming through. Wrapping up with oil, well, we haven't taken out that 67 figure 50 area. That still caps back here in March. Technically, not overly strong in terms of the pattern. So I feel that we may see this cap as around 67, 67.5 to continue, and maybe see a small pullback to the start of the week. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.